morning, everyone, and welcome to the Earlypay Partnership Series. My name is Donelle Brooks, and I'm the National Partnerships Manager. Today, we're really excited to be joined by one of our partners who have a pivotal role in assisting businesses with their financial functions within that business. Before we introduce our very, very charismatic guest today, just a couple of housekeeping rules. We would love, as you all know, as many questions to come through the chat as possible. So please use that chat functionality. So without any further ado, the very charismatic Regional Director of the CFO Centre, Nick Crawford, welcome to the Earlypay Partnership Series.
Thank you for that, Donelle. It's the first time somebody's been so excited about talking to me. You're talking to an accountant. We're normally considered to be the world's most boring people, but there you go. Just for everybody's benefit, I guess you will have worked out that I am not from Australia. I am English, and I have a very strong North of English accent. So, and one tendency is we talk very quickly. So if I am talking too quickly for people, can you at least, I use the chat button or something to advise Donelle, and I will try and slow down. I will try my best to be speak slowly, but yeah, when I get excited, I might get a bit quicker. But yes, will I get excited about being a CFO? Who knows?
I think that's something that all of your team are very passionate about, Nick. And we were chatting earlier before we hit the record button today. So I've been trying to find cheeky ways that I might be able to remind Nick to slow down, because I think he's going to have some important information today. Nick, to start with, firstly, thanks for giving up your time today. Thanks for partnering with Earlypay. We really appreciate the work that you do with businesses. We've had some mutual clients who certainly have been used your services and find them to be extremely beneficial within their business. Tell us a little bit about the CFO Centre and what you actually do.
Yeah, let me sort of perhaps go off with a bit of a tangent. The CFO Centre has actually existed for 22 years now, and it was actually started in the UK by a guy called Colin Mills. And the reason I tell this was Colin has 4 sons, all played professional soccer in the UK. And while these boys were growing up, Colin was spending far too much time at work, never had any time with his kids. So he decided there was more to life than that and decided to start what in the UK was called the FD Centre, because in England you tend to use finance directors rather than CFOs. And what that was around was creating freedom in his life. And then how we've sort of seen that as move forward is the CFO Centre is around trying to provide originally some freedom for people like me as the CFOs, but also around trying to create some freedom in the life of the entrepreneur who we end up working with. So to sort of give a bit more specific answer in terms of who we are and what we do, yes, we reckon to be the largest CFO provider in the world. Globally, there's about 750 of us. In Australia, there's about 45 of us, and we're in all capital cities. So yes, Sydney, Brisbane, Adelaide, Perth, Melbourne, and we do have quite a big outreach up in Newcastle as well, which just happens to be where one of the guys lives, and he's built it up there. And in essence, what we provide is experienced CFOs to SMEs, typical. We would go down to a business that's 2 million, but there's a limit to how much of our time they can afford. But then we work with businesses really from 5 to 50 million. When they get beyond 50 million, they're probably at the stage where they probably need a full-time controller or a full-time CFO, and they've sort of outgrown us. That's a great position for us to get to, because it means we've been very successful with the business. So in reality, we provide part-time CFOs to what I say to people, to businesses who don't need, or can't afford a full-time CFO. And part of the problem often is people don't actually understand what a CFO does. Let me give a chance to just sort of clarify that, because often people assume that we're tax accountants, and no, we're not. We are part of running the finances in a business. And that is around strategy, it's around reporting, it's around managing how the business is doing, and lots of other things that go with it. And typically, a full-time CFO would sit on either the board or would sit on the management team and would be very much responsible for finance. So what we've tried to do is replicate that with SMEs. so that what we can do is provide a part-time CFO who can go and work with them from as little as half a day a month to, I mean, we have had clients where it's 2 and 3 days a week, which is not sustainable just because of the general cost. You'd be better getting a full-time CFO at that stage. But yeah, we will provide people who do that. And yes, as I say, we've got, I guess the other thing I would say that's slightly different between us and a business will typically have internal accounting staff, an external bookkeeper, and a tax accountant. A lot of their role, both, is about recording today, compliance, etc., etc. We take our view as being more looking forward rather than the compliance, which is more about making sure I've done my pass, I've done my payroll, tax, etc., etc. So yeah, we are more about the forward looking and where the business is going. And part of this freedom is working out what the business owner is trying to achieve. Is it around they want some more time to themselves? Is it they want to sell their business, etc., etc.? Again, I like to illustrate things with stories, and one quite recent client that we started working with about 3 or 4 months ago, they had started 2019 just as COVID had kicked in, but they'd got the business up to 14 million during the COVID period, which was pretty good. They were up to about 50 or 60 staff. But the lady who'd started the business, the co-owner, was still doing the payroll. She was still entering all of the paperwork into Xero, etc., etc. So not only was she trying to do a full-time job with the business, but she was doing things that, it was fine when the business started, but it had grown. So for her, it was around creating some time again in her life, but also to give her time in the business to do the things that she's actually good at, which was growing the business instead of getting bogged down in administration, which, I mean, we wouldn't do, but what we would do is we would find an outsourced partner who would help us do it, because we're not into entering things into a computer. We're too expensive for that. It's more around making sure it's done properly, etc., etc., etc.
Yeah, I think, Nick, what's really interesting, that you said there, and it's something that we do too, the greatest story for us in what we do, lending money, is when a client leaves us because they've become so successful, they've grown beautifully, they've had the right things in place to be able to get them to that stage. They either don't need us anymore or they can access mainstream funding. And for us, that's a success story. Having a client leave us for those reasons is actually a success story. And I think that's really important for people to remember. The other thing that, you mentioned that we also see is people working in their business still. So they start this great business, it grows, they have this exponential growth, they have these amazing opportunities, and they start being pulled away from what their key focus is and why the business is so successful. So engaging with people like yourself who can streamline some of that functionality and allow business owners to work in the place of the business where they're the strongest is quite often very, very valuable.
And I think one of the other things that we find as well is, obviously it depends where the business is, but you will tend to find that a lot of the owners suffer financial stress, and because it's them on their own, often, or it's they might have 2 or 3 directors, but normally it's one person. They're losing sleep, worrying, etc., etc. And what we try and do is come in and say, look, we'll take the stress away from you. We'll try and help you get through this process. So what's important to us, taking a step backwards, is about finding the right person. So part of my role is, when we get a potential new client, is to meet the client, try and work out the personality of the main person who we're going to be dealing with, or a management team or whatever it is, and then go back to our team and go, it's Mary or it's Joe or it's Fred, to put the right person in. It's not necessarily always about skills, because I would argue within most industries our skills are fairly transferable. It's we're not a plumber, we're not an electrician, we're sort of more generalists around the finance. So it's around helping the business owner by taking some of the stress away from them and saying to them, look, I know it seems massive to you, but trust us, we can deal with it and we can take it forward. But the other thing that's quite important in all of this is that we build trust, so that if we are working with a client and they've got some issues around funding, that we feel comfortable to be able to bring along the likes of Earlypay or somebody else and say, look, these guys have got the solution for you. So for us, we've got to build that trust with that client in the first few months, that they see that we're not there just to, if you will, just to make money. Most of us are at that point of our career where money is still obviously important, but it's not the number one driver. Most of us have got to the latter end of our career, and we do genuinely get satisfaction out of helping business people achieve their goals. There's there's no greater reward than, as you just said, about a business leaving us because they've actually achieved what they want to do.
Absolutely.
I'm actually working with a client at the moment, and we're selling the business. It might mean that I don't have a client in 2 months' time, but it's what the clients wanted to do. So we've been going through that process in the last 3-4 months with lots of due diligence with a large accounting firm to make sure that we've got all the information. But that was their goal, so that's where they want to get to, and then that helps them. Again, I think the other thing I would say about in terms of us in a model, what we want to be is we want to be part of the team. There are, and I'm not knocking people who do it this way, but there are other people who are out there who only will work remotely, so they are never face to face with the people. They don't necessarily understand what's going on in the business. They don't see. But I think body language is a very important thing. You sit in front of somebody and you can see whether they're stressed or not. So it is quite important. So yes, we try to make sure that we can work with the clients as long as it works. I mean, sometimes yes, they haven't got the space and we can only go there maybe once a month or something. But again, an extreme example, recently we picked up a farm out in Griffith, because they can't get CFOs out in Griffith. This is quite a large operation, and one of the guys flies out and spends 2 nights a week out in Griffith and works with this client out there. Whether again that's a long-term sustainable solution, I'm not really sure, but in the short term, yes, that's what's important to him, and that's what's important to us, that we get somebody out on site and that they become part of their team and get involved in lots of things. It's not just about finance.
I think that's the key, Nick, is it's a transformational engagement with the CFO Centre. So I like it's not transactional. It's transformational. It's to achieve a goal. And I love that you talk about, it's not a round robin. It's not who's the next CFO who's got time to be able to take on a new client. It's about where the personalities sit, where the alignment sits between the CFO that you're going to place and the business that you're going to be engaging with. I think that's extremely valuable because there's often robust and hard discussions, I'm sure, that happen when you step into businesses. And so you need to be able to have that trust factor and belief in the person that you're working with.
And again, using a story as a demonstration, I had a client that we've now had for about 4 years. I originally first introduced a CFO who had perfect industry experience, but I got a phone call after about 6 weeks from the CEO saying the person just wasn't the fit for the business. Could we either find another CFO or the relationship would break? And as it turned out, we put another CFO in, and that CFO, as I say, has been working with them for about 3.5-4 years now, and they're very happy. And it's just about that chemistry. That chemistry is what's important. And
perfect.
A lot of it is what brings us in, and I guess what brings us in is there's things like cash flow. People don't understand how to improve their profitability. They don't necessarily understand pricing of their product, etc., etc. It might sound strange, but the number of businesses that I've been into and they really do not understand. They're okay with the direct cost of people and the materials, but once you get below and there's overheads and things to factor into it, they struggle. And then the other one is exit, that people may well be, again, I would probably say that 90% of the people I ever meet tell me they're going to sell their business within 5 years for 50 million. The reality of the situation is it's not going to happen, but you can try and help them. And a lot of it there is about improving the corporate governance within the business, providing information so that on an ongoing basis, when you do get to a DD type stage, then you've got all the information that's required, and you don't have to go back and reconstruct everything, which might be the case otherwise.
Yeah, absolutely. Nick, I'm really interested, certainly working with clients and sitting as a regional director in the business. I'm actually going to split this up into 2 questions. Let's talk about some of the negative things that you're seeing in the market at the moment, because I'd like to finish this question on the positive trends and the positive things that you're seeing in the market. But what are some of the struggles that you're seeing, hearing, working with clients in the current economic climate?
It's the obvious one is cash flow. I mean, we are seeing, just as I said before, the clients tend to be that SME stage, so they're not the big boy. They don't have the big influence. So we are seeing a number of larger customers who are finding any excuse they possibly can to not pay SMEs on time, and then obviously that has severe consequences to businesses. To the knock-on effect that yes, there are significant businesses during COVID. Oh, sorry, there are a significant number of businesses that during COVID have got significant tax debts, and that is again something else that is putting a lot of pressure on people. Again, Donelle and I were talking earlier on, and one of the other partners who's done one of these was Tax Assure, and yeah, we work alongside Tax Assure and where appropriate with clients. And I know, talking to Michael Moon, who's one of the owners of that business, he tells me that the ATO are just very gun ho at the moment. So obviously it's very stressful for people when the ATO, because the ATO have changed their style in the sense that they're not going for the business anymore, they're going for the director. So the director's getting the notice from the ATO. So yes, ATO cash flow. Strangely, when I reached out to some of the guys, excuse me, to ask them what other things they were seeing, getting people back into the office is a big drive. So we've got a couple of clients where they're even now looking at sort of employee share option type schemes or share schemes to try and encourage people to come back into the business, because people have just got so happy working at home that they no longer want to come into the office, which obviously is not really, well, it's not great for team building.
No, I think you and I too, when I started work, even hybrid working roles were never, ever even possibly considered. You went to the office and you worked in the office. And I think it's one of the benefits of COVID is being able to have the ability to work from home, and people are set up now and, they've got their home office, but that conduciveness and that team environment and all feeling like you're working together for one goal, you can only get when you're together face to face. And I think hybrid is where we need to be going and really trying to push as business owners to get people in the office a couple of days a week all together.
Because then I saw the complete opposite of it yesterday. I was at a board meeting at one of my clients, and there was two guys who permanently work at home who are now complaining about mental health and the potential implications of that. So you can't win. I mean, unfortunately, the employer can't win. You're stuck in the middle with both ends of the spectrum. Staff retention and recruitment is a big issue. Again, one client we have tried, I think we're on to our fourth finance manager. The other three who we tried to recruit went back to their current employers and said, I've been offered a job. So their current employer then offered them another 20 grand or something. So they stayed. That's an example that's obviously close to my heart, but I know significantly in clients that they're just struggling to get blue-collar workers, whatever's needed to push their businesses forward. So it is tough. It is tough. We've got a couple of clients who've got significant order books but can't deliver on the order book because they haven't got the people to drive it forward. So yeah, that is
absolutely. I feel like with that one too, Nick, we're hearing as well, and certainly seeing across our industry to some respect is, that increase in base salaries because of this recruitment issue. And so we've seen a little bit of movement where people have moved, and there's a lot of financial pressure as well. So I feel as though there's a lot of decisions being made, understandably, to support financial stress in the home or in the family or whatever it may be, and then finding that the grass is not always greener. And there's other things that, aren't quite as, suitable or conducive to their home life. But, everyone seems to be chasing the dollar at the moment.
And one of the knock-on consequences of that, again, is the business might start to suffer on its profit levels because they can't hand on those salary. They're having to increase hourly rates or increase salaries or whatever to retain staff. and it's not always possible to pass it straight on to the client. So the profit margins are being squeezed. That then has a knock-on impact to cash flow, etc., etc., etc. So it is a very, 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 very tough time at the moment. And obviously, I think people are talking probably the end of next 24 before we really start to come back out of it. So I think, yeah, it's going to be a challenging time for lots of businesses over the and again, particularly in certain sectors. I don't think we've had a building company go bust for about 10 days, but prior to that, there's been significant numbers of construction companies who've had fixed prices to attract work. That definitely the increase in salaries and raw materials has just caused major angst for them.
Absolutely. So we know, Nick, we've got, ATO, we know we've got retention and recruitment, we know we've got cash flow, we know we've got supply chain issues, and that tends to paint a fairly somber picture when you read them out like that. But we know there's lots of great things happening. We know that as many businesses are opening, as we're seeing closing. What are some of the really positive things that you and your team are seeing in the market at the moment?
Likewise, I mean, there is businesses who are in specific areas where one, again, something that's I guess in the news quite a lot around social housing. So there's somebody who we work with who's involved in that area, and it's just going off the scale in potential work for them. But generally, I mean, again, a great story for me is I have a client who works in the travel game, and you can imagine during COVID it just fell off the planet. Our revenue dropped 95% in 1 month. We are now back to pre-COVID levels, but again, a lot of it's down to hard work of the entrepreneur who've taken them. I sat with the guys, and we had some very dark moments, but it was, how do we keep going? How do we get through? And we did various things to get us through that, and then we've come out the other side. And I mean, it's gratifying, but it's also quite pleasing. Is probably not a strong enough word. It's great to see for these two guys that after what they've been through, because it's owned by two guys, that now things are going very much in the other direction, and they're making lots of money. So we have lots of positive stories, but again, I think a lot of it is down to the individuals driving the business. I've got another client in the construction industry who I've been working with them now for about 5 years. We've gone from about a $6 million business to we'll do $40 million this year, and they make lots of profit. So yes, if you get it right, you can get it right. As I said earlier, we have seen construction companies that are going out of business because of costs in particular. But if you do get it right, it works for people. And yes, there are positive stories as well as negative stories. Unfortunately, we tend to get more into the negative rather than the positive, because people. I don't think anybody wakes up on a Monday morning and says, I need a CFO. I just don't, that does not happen. People will normally say, I need a CFO for some of the reasons that I said earlier on. And particularly at the moment, I think it is where people are starting to struggle. If people are starting to struggle from, because one of the things that I didn't quite touch on is your sector as well. And I'm not meaning Earlypay per se, but I know few people have been trying to raise a bit of finance. It's just getting tougher and tougher and tougher. So yes, it's that as well. We need some working capital, but we can't get it, or we can get it, but it's daily repayments and it's ridiculous interest rates and it's all sorts of things. So I think that's making things tough for people. So yeah, the reality for us, unfortunately, is that we see more of the negative side than we do of the positive side. Yes, businesses do go on and do great things, but unfortunately, it tends to be the sort of the fewer rather than the greater number, and the greater number tend to be the ones that we have to struggle with and share the stress of the owners. As we said, that's one of the things that happens. We're engrossed in their business, and therefore, that's what happens.
Yeah, and I think too that you're right with different funding lines and different financing options. I think that's, certainly one of the things with the partnership series and, through education that we try and push as a lender. We completely appreciate that our product is not for everyone and it's extremely niche. But the boom of, the unsecured product that we had over time, that has a place as well. but that's why we roll out this education to try and educate our brokers to become more invested, to become more transformational than transactional with their clients, to really make sure that they're sourcing the right funding option, whether it's an overdraft, whether it's debtor finance, you know, whether it's, you know, a business credit card, or whether it is a daily repayment because it's a short term, it's in and out, and it's going to, you know, quickly resolve the burning platform that's there right now. I think that's the key, is being really knowledgeable about everything that's out there, because sometimes it's a combination. You've got a burning platform today, but you need a longer term strategy as well. So I think it's really important that we remember that, you know, as advisors, as consultants, as trusted professionals to SMEs out there, it really is our job to make sure that we're surrounding ourselves with as much knowledge, as much network that we can to support those clients.
Exactly right, because I think at the end of the day, you know, the client has probably got a very limited knowledge of what products are available out there. So often it will be that, yeah, we need to do something, and then we would reach out to a broker who we trust and say, look, this is what the client needs. Can you find the right product? You're the expert in that field, not me. I know how much we need, because we can see it from cash flows and stuff like that. But you go away and find the right product for the client, and with somebody who's going to work with us.
Correct. And we know how much business brokers are transacting when it comes to property. And we know that we're starting to see that shift in the commercial lending space as well, that more and more businesses are going to brokers, you know, for their commercial lending needs. And so, you know, I love that. I think it's really important that we, you know, are open to every solution. And again, surrounding and connecting with the right professionals to say, I need an accountant here, I need a broker there, I need this, I need a marketing person over here to help increase sales, whatever it may be. Nick, I'm really interested, and as we get to the end, I sort of want to really deep dive into how, you know, you support brokers and accountants and how they can engage with you. But before we do that, I know that you've got your 12 sort of financial building blocks, and that's almost a starting place, you know, when you visit a client. Just explain to me that sort of process on that first meeting, first sort of discovery session that you have.
So it's exactly the word, the discovery session. So what we're obviously, when you walk into a business, you've got some ideas in terms of what the issues are going to be, but you know what we're trying to do is tease out what they are. And I guess we talk about, there's two phases when we work with a client. And again, as we said earlier on, we're not consultants, so we're not there to write a report and say you have got to do this. We're there to do it with the client. And therefore, we come up with, and I'll go back to the 12 boxes in a minute, but this is just sort of, we come up with an early bit, which is really the things that need to be fixed now. And now will be dictated by the availability of funds and the amount of work that we think needs to be done. So we do an initial piece of work. Hopefully, it's normally about 90 days. And we talk about a 90-day plan, and we fix certain things, etc., etc. And then you get into a more steady working relationship, which is around what the service would provide on an ongoing basis. And again, maybe to come back, and I perhaps didn't touch it early on, we are in for the long haul. I've got several clients that I've worked with for 5 years. One of the guys down in Adelaide's been with somebody for 8 years. So, you know, we do build those long-term relationships. But the idea of the 12 boxes is, yes, it's a sort of a stimulus for us to go through and talk to people and identify what their needs are. And while we sort of categorise them into business support, operational skills, and strategic planning. Obviously, what we've talked about, our role is pretty strategic in terms of the financial. But to get to that stage, we've normally got to go through this first bit first and fix a lot of the things. In terms of the sort of business support things, which are around compliance, tax planning, outsourcing, and banking relationships, we don't necessarily get very closely involved. Sometimes it's about overseeing. Because, you know, outsourcing, yes, we need to make sure you've got the right. If you've outsourced your bookkeeper or you've outsourced your accountant, etc., we need to make sure it's the right person. And yes, you might be having issues with your banking, and we'll go and talk to the banks and try and fix some of those things. But they tend to not be where we play. It's more of an oversight in those spaces. But that's not to say if we come across a client and the client has got something in one of those areas that needs fixing, then we will we will do that as part of the initial process. And then on an ongoing basis, yes, we will have relationships with the tax accountant, we'll have relationships with the bookkeeper, we'll have relationships with other outsourced people, we'll have relationships with the bank, etc., etc. Where we tend to play, but we've also got to make sure that compliance is, whilst people will have external accountants to do the compliance work, we're also there to make sure it happens on time. That we chase the tax accountant if they're not doing the payroll tax returns, or they're not doing the other returns that need to be done. So that, again, it takes the worry away from the owner. The owner doesn't have to think about that. That's something that the CFO will look after. So the mid area is around internal systems, reporting, profit improvement, and cash flow management, and that tends to be the main area that we end up fixing at the beginning, but also the main area that we will play in on an ongoing basis. And yeah, as I said, normally nobody wakes up and says, I need a CFO. I need a CFO for my business. It's not like wearing a badge. It's normally something that the people have got to a certain point in the development of their business. And yes, they've got a problem. It might be a cash flow management problem, but invariably when we get into them, we find, yes, the internal systems are fairly poor, the reporting is pretty average, that, as I said earlier on, people don't necessarily understand how to price a product, which I've worked in the accounting game now for 40 years, so heaps of experience, and going into places and people not understanding. And again, I'll tell a story when I went into a client and they said to me, we don't really understand why we're not making profit. And I said, well, explain to me how you price this product. Well, yeah, and we were in infinite detail about hours worked and materials, etc., to come to a price. And I went, there you go. And then we sell for this, but so therefore we should be making a 10% profit. I said, well, you've forgotten the 30% of overheads that sit outside your direct costs. What do you mean? I went, well, your rent and the people who don't. So sometimes it is quite fundamental, and people have got to a certain point with, I guess, by luck sometimes rather than good management. So it's around trying to then get them to recognise that things need to be changed, and that they've got systems in place to be able to keep monitoring it. I mean, again, working with a client at the moment, we're trying to introduce a system where we can look at project profitability. Because yes, somebody goes and prices something, but who's to say that that was the right price until you've been able to measure something, go back, review, and then say, no, going forward, we need to look at that. Reporting, again, I've seen every form. I guess the one thing that people will tend to contact look at really three things. Is my revenue growing? Is my profit growing? Is my cap? Have I got positive cash? I mean, that's only three things. One thing that people tend to forget is a balance sheet. And you go, well, ultimately, if you're a director of a company, you are responsible for the solvency of the business. The way you're going to tell that is through balance sheet. But by the same token, we have to accept that people are not necessarily very financially minded, and giving them a set of numbers. And again, trust me, I've done this for 30 years. Sometimes you just put a set of numbers in front of people and they just glaze over. They go, what's all this about? So we've got to learn what's the most appropriate way to show people. Is it graphs? Is it charts? Yes, you've got to have some sort of numbers in there, but you've also got to come up with a way of making sure that people want to engage and understand what's going on in their business. Just giving them a printout to Zero, MYOB, or whatever accounting product sometimes will just be a turn off. So it's about getting them to focus on things that are important, but also presenting it to them in a way that enables them to work with it and understand.
Exactly, and I think that's the thing, that we talk about a little bit as well in our business is what the data means, what the report means. It's great to have a wonderful reporting suite with, all the bits and pieces in there, but if you're not understanding the flags and then the levers that need to be pulled in relation to that, then your reporting is actually worthless. You really need to understand what that reporting is giving you. So I feel like, helping and putting that in place and providing meaningful reporting that has clear understanding is absolutely vital, regardless of the size of your business. So I love to hear your passion around that.
And obviously, part of what and I'll come to it a bit in a minute, but also what you're looking at is, well, you've got a plan. and part of the reporting is reporting against that plan, and then, as you've just said, being able to then see what corrective action needs to be taken to put us back on track. It's not just there for somebody to file, it's there to be used as a tool to help you achieve the goals that you want to achieve. And I guess the last one under this heading, which is, again, a key one, is cash flow management. Again, we find it quite amazing the number of businesses that just do not project their cash requirements. Yeah, I've got money in the bank today. That's what matters. Well, hang on. Let's just look at a business. A typical business will do the BAS once a quarter and they'll do the super once a quarter. So come the end of October-ish, people will have big outlay in cash for their super contributions for the quarter and their BAS for the quarter. Have you planned to make sure that you're going to have enough money for that? So I always talk about what we try and do is build something that, again, is as meaningful as possible for the client. But what we're trying to do is identify the potholes. That this is more about short-term cash. We're over a 13-week period. Yeah, in that week we need to find $500,000 to pay the BAS and the super. Well, we better be making sure that we're putting a bit of money to one side and we're not going crazy paying creditors or whatever we need to do. We've got to preserve the position so that when we get to the end, we are okay. So yes, cash flow management is a key one, I think, in terms of where we go with people. And then once we've focused on that and we've brought that under control, the other thing is around strategic planning. And again, a couple of the key ones in there are around exit planning. As I said, lots of people tell me that they're going to sell their business, and it's around working with them to increase, maximize value.
Yep.
Again, I think I talked about somebody earlier on who their business had grown very quickly during COVID. They had been approached to sell their business, but they had the sense to see that actually, by doing a few more things that we could help them with, and maybe leaving it for another 2 or 3 years, the multiple and the value they'll get at the end of it is far greater than they would get now. So again, it's working with people to ensure that at the end of it, they get the maximum value. And again, there's also things around, this is the boring stuff, it is around corporate governance and making sure that we've got things in place that, so if somebody does come along, then all the things that they would expect to see are there. And it may be just having meetings and recording things, and that people can see that the business hasn't grown from here to here purely by luck. It's been by good management, and the good management is recorded, if you will, through minutes or whatever it is, so that people can see that yes, the business has been on a journey, and the journey has been steered by the people in charge, and it's not been, oh yeah, they've just they've effectively won the lotto and it's come up there. And then the other one, which again is linked back to yourself and to a degree some of the brokers, is strategic funding, and it could be for a number of things. I've been in again with clients who we've got one who was building a factory, we've got another who bought another business. So yes, it's working with them to identify the quantum and the type of strategic funding that's needed to get them to where they want to be, and then work with the appropriate people to get that over the line. And again, I think what I would say about ourselves is that, because obviously it's things that we've done for a long time, we know what banks are expecting, and therefore to put together a package of information that enables the person who you deal with in the bank to be able to go up to the credit committee and get things ticked off is often a lot easier, because we will anticipate it in advance and therefore get things done quite quickly. Again, I did one early on with judo, and I think we got it signed off in about 8 days, which was pretty. I mean, yes, we used a good broker, but a lot of it was also down to what we put together, guided by me in terms of information, financial modelling, etc., so that we were able to tick all of the boxes, and we got the money that we required, which was for an acquisition in that instance. But yes, corporate funding, strategic funding is sort of a big area that we play in as well. But yes, the 12 boxes.
Sorry, Nick, you go.
I was just going to say the 12 boxes is a framework that we use, and when we do this discovery session with a client, we might go, it won't be all 12, but there might be 3 or 4 that we identify that need to be worked on, and then that's how we would sort of build our work plan around first that initial piece, and then the ongoing things that need to be done to take us to where we want to go. So yes, it's a tool that we use, and obviously there's quite a lot of stuff underneath it as well, but it's just 12 areas that have been identified by the CFO Centre as key areas in a business journey.
And I think it's just really important. It's a great tool too for our brokers and partners just to use and reflect on, that these are sort of the 12, key pillars. And while there's a lot when you lift the hood that sits underneath those, it's actually quite a good, they're 12 strong boxes, but what's inside the box, can be a multiple of things. But one thing that I just wanted to touch on then, when you spoke about packaging for banking, I think that's really important. We partner with a training organisation for the scholarship program, Ascendo, and they run a big 3.5-hour session on credit submission writing and how to package a deal to get the response that you want. And that's obviously nothing about fabrication, but that's about telling a story.
Right.
About the client and the future plans and the future proofing that's taken into account too. But I think the other thing is your knowledge and your team's knowledge, around being able to identify when bank funding is not obtainable right now, but you need some funding, and often helping business owners understand that cost of funding, because everyone wants to get the cheapest interest rate they can. And so refusing to move forward on finance because it's too expensive can sometimes be a hindrance, as opposed to what it's meant to be there for, which is a help, which is if there's no money coming in to do what you need to do, you haven't got that capital injection, if that costs you an extra $3,000 than it would have if you went to the bank, but you've still made X, I think that cost of funding and explanation is lost sometimes.
And again, I think what it is quite important is when businesses are growing, because the working capital requirements are increasing all of the time. And yes, it might not be what you want today, but you might come up with a short-term solution that'll buy you another 6 months, during which time you can go and do a proper structured financing arrangement that you can get rid of the first one and you can put it into a second one.
Absolutely.
Again, a little story of and this was my early days with the CFO Centre, and perhaps just a reflection on how the whole world has changed. But I was talking to a guy, and I think it was a marketing business, and he was probably about my age, and he was ready for retirement, and he wanted to sell the business to his 2 junior partners. And I was talking to him, and he said, I'm just going to go off to the bank, and I'm going to talk to the bank, and I'm going to tell them they're going to lend me the money that I need so that these other 2 guys can buy me out. And I went, have we got any modelling, etc., etc.? He said, no, I've banked with these guys for 20 years or something. They'll lend me the money. Surprise, surprise. He got a very negative response. Just naivety sometimes. It just needs somebody like, one of yourselves or one of your brokers or somebody like us just to tell them what the world's really like. And unfortunately, it's not always that rosy.
Correct. Now, just before we head into the last question, I just wanted to let anyone know who's on now. We're going to start talking about engagement and how, Nick's mentioned a few times about they will engage brokers, but if you need to engage, Nick and the CFO Centre team, because you're working with a client, we are going to touch on that. But if you've got any direct questions that you'd like me to ask Nick, now is the time to put them in the chat. But Nick, how do you work with other professionals? For us today, we've probably got accountants and brokers on there and probably a couple of clients, but typically brokers. Yeah. How does the engagement work? Well, how does the process work?
One of the things we try and say to clients, potential clients, is we bring to them a network. You're not just engaging with the CFO Centre, you're engaging with a bigger network of trusted advisors that we will introduce if we consider appropriate. And again, an example, I have got one client where I've got 4 different partners, if you will, who we work with, who I've introduced to the business, and the client has used them because they trust me and I trust the third party. So we have two types of partners, if you will. We use what we call, and I guess the A-class ones, because they're the ones we like the best. We call them distribution partners. And what that's around is trying to build a relationship where we both can help each other. So we're almost spotting opportunities for each other. So yes, Earlypay may spot an opportunity for the CFO Centre and vice versa. Mm-hmm. The other one, the sort of next tier down, is what we call a network partner. And what they do is help us. They provide a service to a client. For whatever reason, they may never be able to introduce us to a client. And sometimes that's the case with a broker because they don't have that sort of relationship with with the CEO or whoever within the organisation. I might be wrong, but I know I've dealt with a broker in the past and they've been quite open and said, look, I don't think it's going to be a two-way street. And I said, look, part of what we also need is a solution to our clients' problems, because where it makes us look good is we solve their problems. As I said early, and I'm probably the third time I've said it, we're not in there as a consultant. We're not in there to write a report. We're in there for the long journey. And one of their problems might be around, I don't know, HR issues. It might be a legal issue. It might be a funding issue. And if what we are able to do is to introduce a lawyer, an HR person, a broker to them and say, look, we know these guys. We believe these guys have got a solution for you. Ultimately, it's your decision. It's not mine. But we trust these guys, and we're happy to introduce them, because obviously we don't want them to destroy our brand. We can't have somebody who's going to be dangerous to our brand. So yes, so that's the way we work. We're not in it for a fee. We don't expect it. We don't expect an agreement with a broker for them to then pay us a commission based on what they earn. That's not what we're about. What we're about is providing a solution for a client. And I've said to people in the past, if you want to buy me lunch, so be it. But I'm not expecting a fee based on the amount of money you get there. We are looking for a network of people who we can work with, so that when we've got a specific client, they're able to help us solve that solution. With a distribution partner, it's also good if it's a two-way street and they're able to introduce us to potential clients where they see that we may be able to help them and move them forward and preserve them for the broker or whoever it is. So yeah, we have in our network, I guess we have tax accountants, and again, we have to try and I guess be a bit more selective, because some people do then put themselves up as CFOs, and we would dispute that they are CFOs because they don't actually work in the commercial world; they work in the accounting world. And I'm not trying to be disrespectful. There is a big difference. I will always say to people, I know enough about tax to be dangerous, but I'm not a tax accountant. So therefore, I will not provide tax advice to my client. I would say to my client, come and take the advice of a tax accountant who knows the subject better than me. Apart from anything, my insurance won't cover me anyway. So yeah, it's about horses for courses. Yes, we're there with a great deal of knowledge, but it's also about knowing when to stop. The role of a full-time CFO is changed, I guess, during the 80s and 90s, and it became very close to being a COO. So I know when I've done commercial CFO roles, I've been responsible for IT, I've been responsible for HR, etc., etc. So we've all got a general oversight of it as well, but it is around being able to have that network of people who we can introduce to a client where appropriate, and that they can hopefully help the client with it. As I say, funding, cash flow is a big one. So yes, brokers, having a good broker in the background is always very, very helpful. And different options. Having an invoicing discount option as opposed to just having an overdraft or having a loan or whatever, it is very helpful. It's because it's identifying the need of the client and then going off down that route with the person concerned.
Absolutely. We've got a couple of questions. This one always comes up, so we'll get it over and done with first.
Yeah.
How's the fee structure for the client determined?
We basically work on a daily rate. So we work on a rate, it's anywhere between 2,000 and 2,500 a day. But what I would say to is, our contract says it's an 8-hour day, but most of us will always do a bit above and beyond. And the way the agreement works, it's not a tie-in. It's basically, if you're not happy with us, pay us for what we've done and we'll move on. So you're not tied into a 6-month, 12-month, 2-year agreement. Hopefully what people see, and as I say, I've got 5 clients and I've worked with them for nearly 5, each of them for 5 years. So hopefully they've seen the value in working with me, which is why they've kept with us. The other alternative is what we will do is we'll work on a retainer so that people know exactly how much it's going to cost them each month. And then there will be months when, yes, we might do more, and months when we might do less, but across the year it then works for everybody. So yes, it's a daily fee. And again, I would cite this to people that it might sound a lot because it's a daily fee. It's probably what you might pay a builder for the day. I'm looking up because my son is also a chartered accountant. My son became a chartered accountant in when is his chartered accountant on? he became a chartered accountant in 2019. So he's been a chartered accountant for 4 years. He'd probably cost you twice as much now than I would, because of the way he works within an accounting firm. So, when you compare us with what you would pay for an accounting firm, I think we're relatively cheap.
Absolutely. And in terms of engagement, as far as length, I met one of your colleagues at a Brisbane event who, they had a very clear plan that, would be in and out within 12 months. There was a very clear, decisive plan, and are still there, nearly 6 years later. Do you tend to find that you do stay in these businesses once you engage?
And again, people have asked me when it works and when it doesn't work. And when it works is engagement. Strangely enough, I did have one client in the early days who didn't really want to listen to what I got to say. And you go, well, why are you paying my fees? And at the end of the day, we agreed that neither of us were really getting anything from it. So it is around engagement, becoming part of the team, people accepting you as part of the team, and therefore, yes, it works going forward. So being part of that team and obviously contributing, adding value to the business is the big thing. And as I said, we have had 5, 6, 8 year. I'm sure in the UK, where the business has been going for a lot longer, they've probably got much longer ones than that. But yes, our model is around being there for as long as the business needs us. Obviously, as you indicated earlier on, one of the joys is when you see a business get to that size where they need a full-time, probably a financial controller rather than a CFO, but that tells you that you've done with them what you want to do, and
You've done your job.
They're ready to go, and it's great. So yes, it's fairly flexible.
Perfect. Nick, as we wrap up today, a message that you'd like to leave our viewers that have joined us today?
Oh, it's just to say that, CFOs are there to add value to the business, and we are there to try and help the business owner. It's not around us just making money out of it. Believe me, we do get a lot of enjoyment and pleasure out of helping businesses get where they want to be, and we're happy to talk to anybody. Meeting people and talking with people doesn't cost money. It's an introduction. We might not be able to help somebody now, but it might be that in 12 months' time or something that we can. So I'm more than happy to go out and see people. And likewise, more than happy to meet any of the brokers or anything that, if they want to understand a little bit more and how they might be able to work with us, again, more than happy to engage with people and do that.
Perfect. And we'll be sharing your details with all of the attendees today anyway. So if anyone would like to reach out to Nick, we highly encourage you to do so. They are a brilliant team, very, very passionate about what they do. And, I've spoken about this on the partnership series a few times about authenticity, and it's a word that's thrown around, in today's media. And really the only way to do it is to show it. And Nick, certainly you and your team in all of my engagements are very authentic. And when you say you care, you mean it. And so thank you so much for giving up your time today to, enlighten us about what you do, but also, how what you do really helps SMEs today. So Nick Crawford, Regional Director of CFO Centre, thank you so much for joining us for the Earlypay Partnership Series.
You're welcome, Donelle. Thank you.
Thanks very much. Bye, everyone.
Bye.